Hey guys, Richard Hilliard here with another episode of Expert Insights. Today I have TJ Lewis here. He is with the Lewis Group at CMG Home Loans. Honestly, one of the most knowledgeable, helpful, caring mortgage lenders I've worked with in a long time. So I appreciate you coming on today, TJ. We really like working with you and glad you're here.
Absolutely, brother. It's a joy, and I look forward to seeing what education we can provide.
Absolutely. So TJ and I met, I guess about a little over 2 years now, and quickly formed a good working relationship. Showed me that he cared about my clients, and I really appreciated that. I can go to him with, pretty much any question, and whether he knows the answer or not, he's going to find it. And something that has been fun to establish a relationship.
Yeah.
So I wanted to start with, asking questions on the biggest generic overall question. What goes into the loan process?
Right. That overarching, why is everybody so scared to put in a pre-approval in the beginning? Why do it in the first place, right? We're going to kind of dive into that a little bit and kind of my process behind all of it and what's made me and my team so successful throughout the past few years.
Okay, great. So can you tell me a little bit about just kind of maybe just a brief overview of what that initial process looks like? What goes into what you do every day?
Right. So for anybody that's looking to buy a home, their typical first step is they go talk to a realtor, and then they come to me. And what that means is you're going to fill out an application. You're going to chat with me. We're going to go over your goals as far as what you're comfortable with your monthly payment is, what you're comfortable with your down payment, what your credit looks like, what your assets may look like. That's things like your savings account, if you have a 401k. We're going to talk about all that because I want to establish your worthiness of getting a loan, because I had to prove to my company that you can get a loan. And so with that, you're going to put an application in. It's going to ask you all kinds of questions. Some might seem a little crazy. Why am I asking you for your shoe size, blood type? No, I'm just kidding. But when they do ask you for a 2-year history, 2-year history of your residence, 2-year history of your employment, your income, and they're going to look at your assets, and you're going to do a soft credit pull to see what your credit score looks like, what your credit has been over the past 2 years to see if you've had any late payments, if you've had foreclosures, bankruptcies, anything bad. And that's going to help us establish if we can pre-approve you to go buy a home.
Yeah, that sounds like a lot.
It is. There's a lot behind it. There is. And we do our best to not tell you all this up front because I don't want to scare you. And I definitely don't want to scare the realtors off either. So we do our best to make sure it is as efficient and streamlined as possible. That way it's easier on you, because it shouldn't be a process filled with angst and irritation. It should be a joyous time to go buy a house. It's a very, very big thing. And if your lender and your realtor understand that, you're going to have a good experience.
Absolutely. So all of those things you just said happen on pretty much every transaction. And I assume that's a lot of the stuff you just mentioned is why there's so many documents that you guys ask for to be able to back up what somebody's telling you.
Right. So kind of back up a little bit. Leading up to the housing crisis of 2007, 2008, you had loans that were no income, no asset, no income, no job. They call them ninja loans. There was very little verification of anything to just get somebody into a house, which for a lot of people, that was great. But for those that really couldn't afford a house, that's what led to so many foreclosures and bankruptcies that we saw throughout that time. So after that, the federal government came up with a lot of regulations to help us make sure that we're getting you into a home that you can actually afford and that our foreclosures don't really happen as much.
Okay, that makes sense. I'm sure everybody definitely appreciates that part as well.
Yeah, the mortgage bonds is a big part of our economy. So we have to protect that from an economical standpoint, but we also have to protect you as the consumer, that you're not going to have to go through a foreclosure process where we're going to kick you out of your house.
That makes sense.
And so because of that, we ask for a lot of documentation.
Yeah. As somebody that has done, several home purchases in the last couple of years, several with you as my loan officer, you made a joke about shoe size but honestly, I was waiting for you guys to ask for the blood of my firstborn. But at the end of the day, I understand it. You're giving me and giving every borrower a lot of money.
Right.
A lot of money. So we have to make sure that that's good. So tell me about some of the biggest challenges you face in your industry when you're working with buyers that are looking to purchase.
So I think, especially in a time that we see right now, where the economy's okay, it's not booming, it's not awful, it's just kind of right there in the middle. We're kind of coming back from a really bad place, especially from COVID times. You're seeing a lot of credit issues. People are not making as much money, or you've seen inflation rise as much, so much that they can't afford life like they used
For
to.
sure.
They've had to have different expectations on what living meant to them, and so all of my credit scores are pretty low, and getting them qualified has gotten even more challenging because, let's face it, people that are living paycheck to paycheck, they have to decide: do I want to keep the roof over my head, or pay this credit card bill?
Yeah,
And most people are going to pick the roof over their head.
of course.
So I can't fault them for what's happening, but also the challenges are still there to get them qualified. Because if you can't prove that you're going to pay your debt, nobody's going to give you that money to
Of
go
course.
get the house. So that's a really very big problem that we're having, along with income. I mean, a lot of people have been moving jobs over the past few years, doing new things, trying new professions, which is great.
Yeah.
But those jobs might not be salaries, so they're not very easy cut and dry. They might be going into an hourly position where some of it's part-time. They don't have the history behind them. And a lot of these loan programs look at a 2-year history to get them qualified. So you have a lot of income, a lot of credit issues, mostly right now.
Okay, I got you. And what kind of steps are you taking to overcome that? Are there ways to help folks through that and still get them a house, or are they having to wait longer? What are the steps you're taking?
So the biggest thing is education, right? Nobody does this on a daily basis like we do. So they don't know what to expect coming into it, which is why I see a lot of people have hesitation about even putting in an application in the first place.
Mm-hmm.
If I had seen that application 6 months ago, they'd be in a much different spot now.
Okay.
So getting them prepared ahead of time, even if they're like, I think I'm okay, let's just look at it. Because I'm going to do a soft credit pool. I'm not going to do a hard pool that you're bound and you're going to get this hard inquiry and your credits make it worse. Because I want to make sure that you're in a good spot. I can do everything I need to do with a soft credit pool that I can with a hard pool. So as far as credit goes, we have a credit system. We'll look at it. We can get game plans together to get people's scores up,
Okay.
what that looks like. And if their goal is to be in a house within the next year, we can do a 12-month game plan. And if they do all these actions, their credit score is going to be X, Y, Z, whatever the case may be. If their goal is to get in a house by next month, we can do as soon as immediate to see what it might take. Not everybody's in a good credit position to be able to do that. I mean, if you have a credit score that's in the 400s, I might not can get it to 700 by tomorrow.
Yeah.
So it might take a little bit of action on their end to get them there, but we'll help as best we can to get them a game plan to get them ready.
Gotcha. So you just brought up two very different ranges of credit scores. 400s and 700s.
Yeah.
A lot of people think that I hear a lot. Well, my credit's not that great. I don't think I can get approved for a loan, and that's before they even reach out to you or another lender. And it's a difficult conversation to have. But they may tell me, hey, my credit score is like a 630. It's horrible. Is that something you can still work with?
100%.
Okay, so can you?
Look, we can approve, depending on the loan type, 500 and up.
Oh, wow.
It just depends on the loan program that they're seeking. If
Okay.
they're looking to buy a primary residence or an investment property. Those are two different types of
For sure.
purchases. But the riskier the buyer, the riskier the loan program.
Yeah.
And that loan company and that loan program is going to make sure that they are compensated for that risk.
Okay.
That means that they're going to have higher interest rates, maybe higher down payments. They're going to try to offset that risk if you seem to be a risky borrower.
Okay.
So you have to have some more skin in the game.
Yeah, that makes sense. You mentioned that some of the issues you're running into are, low income, credit scores, of course. Is that affecting people not having enough for a down payment and closing costs?
Okay. Yeah. So that brings the third, the trifecta, I call it, the credit, income, and assets.
Okay.
So living paycheck to paycheck, most people don't have assets.
Mhm.
They don't have a 401k. They don't have, parents to help them with a gift. So the best thing that we can do is try to get them approved for down payment assistance.
Okay.
So if their credit score is not where it needs to be at, that's where our first step is going to be. We're going to try and get it up to where it needs to be to get them approved for down payment assistance, and then we can start partnering with those DPA programs to get them in.
Awesome.
How many people have we helped with
Oh.
down payment assistance?
Countless.
And they've come out of pocket zero.
Yeah, for sure.
So it's definitely possible. It's there.
A combination of the down payment assistance from you, us as agents negotiating closing costs for our buyers. Heck, you and I did one recently that just closed last week. Probably the most closing costs I've ever seen. We were able to get, what was it, 14,000 covered?
It's the most I've ever seen.
Insane. But in the market we're in, sellers are wanting to move their properties and they're not moving, and they're having to do stuff that they wouldn't normally do. And that's, our buyer had to come out of pocket, I think, $300 to buy a beautiful property. So, it's really awesome.
Right.
So let's maybe change the tone of, looking at getting pre-approved. And let's say you already have somebody that's approved. Can you explain why taxes, insurance, flood insurance, those three things are so stinking important?
Yeah. So, as getting somebody that's pre-approved, the best that we can do is estimate numbers.
Okay.
And that estimation is going to be on taxes and insurance, whether that be with flood or no flood. But that's important because you're getting qualified off of that monthly payment. So when I tell somebody, hey, you're pre-approved for $200,000, that doesn't mean that they're pre-approved for any $200,000 house on the market. I am pre-approving them off of an estimated monthly payment on that loan amount.
Mhm.
So, we look at the averages for insurances in certain areas, taxes in certain areas. However, some homes have newer roofs, newer HVAC systems, and those can deem that property less risky and have better insurance.
Yeah.
So if you find a house that has, let's say, double the insurance that I estimated, your what's called debt to income ratio may go out and not approve you any longer. So your debt to income, it's a ratio that's based off of how much monthly debt you're paying per month versus how much income you're bringing in. And if it goes over a certain percentage, you may not be approved anymore. So that's why it's very important before even looking to put an offer in. I like to look at quotes and make sure that A, you're comfortable with that monthly payment, and B, we can still get you qualified for that payment, because that might not be the case.
Yeah, it is very true. I can't tell you how many times I've sent you a house that a client's wanting to see, and you're like, well, I need to pull insurance quotes first.
It's very important. I've seen it happen too many times where I got them barely approved, but then they go find a house that has a 20-year-old roof, and that's a $8,000 insurance premium, and they don't qualify on that property.
Oh man, insurance. That's another episode. So, to wrap things up, I'd like for you to maybe, I know we've kind of sat here and been a little doom and gloom kind of on what our buyers are facing and the adversity to get approved in today's market. But what are three things, or maybe more, that you could tell a buyer that they need to be focusing on, whether it's because they want to purchase now or in 6 months? What are the most important things they should focus on so that whenever they apply with you, that they can get approved with no problem?
Yeah. So I'm going to go back to the trifecta again.
Mm-hmm.
Credit, income, and assets. I cannot stress enough that credit is so important.
Mm-hmm.
In America, really is the only country that cares about it, but regardless, this is what we have to do. So I don't know if you have a system already, but review Credit Karma. Your bank might have a credit monitoring app. While it might not have accurate scores, it will show you if there's any late payments reporting, if there's anything negative or derogatory reporting on your side. Monitor your credit. It's very important. Make sure you're protecting it, because it is what is going to bring you to that next level when it comes to financing really anything, whether that be a car, mortgage, credit cards, etc. Protect it like it's worth a lot, because it is. And if you have questions on what that really means for you and your situation, the worst that you can do is put an application in with me, and I'll do a soft credit pull. It doesn't affect you any, And that gives us the opportunity to talk with you and maybe see about getting a game plan together for the future. And the second would be your income. Not everybody is in a position to go find $1 million
Yeah.
$1 million a year income, but that's fine. You don't have to make that much money to get approved for a house. What's important is that you have consistency. And what I mean by that is if you're making $20 an hour, make sure you've been doing it for at least 2 years. If you've been in that same line of work for 2 years, if I can average that income, you're good. But if you worked a part-time job last month and now you have a new job, there's a lot of hurdles that we have to overcome. So it's very important that you have some consistency with your income. And third is going to be assets. It's hard, I know, to save money. A lot of people are living paycheck to paycheck, but it's good to have a plan. Try to put it into your 401k. Talk to friends and family to see if they would be willing to do a gift instead of a Christmas present. There's a lot of programs out there, especially with my company. We have a program called Home Funded that allows your friends and family to donate to your down payment. It's free. It's free to do, and there's no cost to them other than gifting you money if that's what they want to do. And we can use that as funds in a down payment. And if you don't use it, you can always take it back out. But it is there for you. There's a lot of programs that we can look at to get you ready. So it's not all doom and gloom. It's really just about having a plan together and making sure that you're taking the actions in enough time. Because if you don't know that you're ready and you want to buy tomorrow, you probably should have checked 2 months ago to see if you're ready.
Yeah.
It's very important.
It is, very much so. Well, you know what? I really appreciate you coming in today. Again, your advice is just above and beyond. You obviously care. You show that through every transaction that we do together. And I'm really excited to see what the future holds. I don't know about your side of things, but on our side, predictions are for the market to improve.
I think we're going to see an incredible 2026.
I completely agree. I have not seen one thing showing the contrary.
Yeah.
I'm very excited about it. I'm very excited about it for our buyers, where the interest rates are going, purchasing power. Some of the programs you guys are offering are insane. So with that being said, if you guys have any further questions that maybe we didn't answer today, you could definitely reach out to TJ. His video will be in the link below us. His phone number will be in the link below us, as well as an email and contact information to apply for a loan, all that good stuff. And we can definitely, put you in touch and go from there and see where you fall. But other than that, anything else you want to add today?
Not really. I think what our key takeaway should be is preparedness, right? Really don't expect, if you feel like you're not ready yet, start now. Yeah. There's not going to be anything that's going to hurt you other than the knowledge of knowing what's next. So preparedness is going to be my biggest thing for everybody.
Awesome. Cool. Well, I appreciate you coming today. Guys, this has been another episode of Expert Insights. Stay tuned. We will be doing a video with a home inspector here soon. That is a whole nother ball game between the real estate process. So make sure you check that one out as well. And have a good day. Thanks. Bye.